Hey everyone, Lesley Myrick here, interior designer and business coach with Nancy Quinn and the Profit Insiders Academy. Today we have the fabulous Carleen Lamay of C2 Accounting. She is a joy because she makes money unscary and she's just a lovely human. So I love these conversations, Carleen, because you have such a gift for helping us visual creative people with the stuff that normally we're like, I don't want to deal with it. And today we're talking about project budgeting, which I'm like, budget. Don't let that word throw you off.
Well, more project profitability, but yes, we will get into budgeting as well, but definitely profitability.
Okay. I want to hear what you have to say about this. So we want to talk about profit margins and how you plan for that in your projects. And it has to happen right from the beginning.
It really does, because how many times have people like, I have all these projects coming in, but they don't really see the money reflected in the bottom line, or they're like, wait, where did all my profit go? So there are two things, right? There's the project profitability when you're looking at how do I budget for this project, but then also the business, because you could actually do really well on your project margins and actually make your gross margins are really well. But then if you're spending, like one of my former clients says, like a drug dealer, then you still at the end of the day, you just won't have any money. So you have to look at it kind of twofold, I think.
Yeah. So it's partly about how much are you bringing into the business? Are you charging appropriately? Do you have appropriate margins on goods? And how much is going out? Are you being mindful of what you're investing your money in, what you're spending on, what expenses are going out the door?
Exactly. So when people are talking about pricing their interior design services for profit, I'm sorry. So they were to look at things like understanding the true cost of their time. So
I want to hear more about that.
so we're talking about not just billable hours, but what about like the admin, the sourcing, project coordination behind the scenes? And if your team isn't tracking even if you're not paying people on an hourly basis, because it's like, oh, well, they're salary, so we don't have to worry about tracking time. Even for yourself, understanding how much time is it really going into each of these projects will help you understand the profitability. Because let's say you, at some point, replace yourself in some of those processes and you do have to pay someone, understanding really truly how much does it cost to support the project, not just how much a couch costs or the light fixture costs. That's really important. I don't think a lot of people think of that. And I'm not going to lie, I'm not the best at tracking my own personal time. So I'm speaking to the choir, preaching to myself, but it's definitely one of those things where we, as business owners, we have to come up with a system that works for us to make sure we're tracking our time and our team is tracking our time. So number two, we talked about your true cost of your time. Number two is obviously factoring your materials, your vendor markups, but also your subcontractor costs, overhead, shipping, freight. And I know that we all know these terms and we're like thinking about it, but sometimes we underestimate, right? And we don't go back and maybe get the difference from the client. So also making sure that you're protecting yourself in your agreements, especially in today's environment where prices are changing really quickly. Sometimes there's a tariff, sometimes there's not a tariff, right? So how do you protect your business so that the client understands that this is the price today, but if we go to procurement next week and all of a sudden the price has gone up 20%, or there's a tariff that we didn't factor into, how is that going to be passed on to the client? So that that's not coming out of your profit.
And I think that's so important you say that. We coach so many designers, Carleen, that are so afraid to pass on those tariffs. So they're just like, well, we'll just absorb it. We'll just eat it. Like, I don't want to upset the client. It's like, this is business. The vendor passed it on to you. Like, it's not your responsibility. And let's be real. Like, it sucks. No one likes this. No one wants to be the bearer of bad news, but we're the messenger. And I think I hope that's encouraging to people that you don't have to eat these costs. They are not your fault. You didn't make a mistake. It's not an oversight. This is just the reality of what's happening right now, October 2025 in the design world. And Carleen, like we were talking about before we went live, adapt or die. This is what we have to adapt to right now. You can't just keep using your own money to buy your clients pretty things because you don't want that money conversation.
Well, that's one of the reasons why you have those conversations before you go, like in the process, and build it into your contract, because this is something you would never have to you'd have to think about a year ago, but you do need to think about it today, because if your client understands that um, this could happen, at least
Mhm.
mentally they're prepared. Whereas if you just come out of the blue, then they may have, I could see them being a little like, oh, well, I wasn't expecting to pay an extra $10,000 or whatever it is. Um, Also, even sales rate changes, because taxing municipalities will sometimes change a sales tax rate that so you may have quoted it, say, at 6%, and they implement a new tax change in October, and now it's 6.25. Well, that's 0.25% more than the client is planning on paying. Are you
Mhm.
also going to absorb that? So you really do need to think as a business person and figure out, how do I write these contingencies into my contracts and my agreements, so that the client understands that some things are just beyond my control.
Yeah.
Like, I control as much as I can, but there's things I can't control, like price changes, tariffs, sales tax rates changes, and they're just going to have to understand, and that's just part of doing business.
No, and that's so good to be aware of, because I don't know if everybody realizes that sales tax rates can change
They
often.
can.
We had
Hmm.
it in the county that I do a lot of work in. It just changed this month. It went up a whole percent. And
Ooh, yeah, that
I
makes a
get those
difference.
quarterly emails from QuickBooks that have the sales tax, and it's annoying and tedious, but I go check every month for my state and my counties.
Hmm.
It's a pain, but if I'm telling you, if you do it wrong, you're on the hook for that. Or
Yeah,
it's a very difficult client conversation
right.
if you did drop the ball on sales tax. And that can
Exactly.
absolutely eat into your profit in a very serious way if you're not on top of these things.
It really, really can. So I've seen people do a couple of different pricing modules, and I
Mhm.
know that you guys have how you coach people, but I've seen where they just, whatever I pay, I mark it up and I charge you. I've seen others who don't want to send 1,000 invoices and have their clients feel like they're being nickel and dime, so they just charge a flat whatever percentage that's going to cover things like the white glove
Yeah, shipping,
package,
freight, tax,
everything.
shipping, freight, delivery, white glove, receiving,
Exactly.
storage. Yep, and that is how we teach.
Right. And so sometimes, yes, your margins may be smaller, but then other times it'll be larger. And so it kind of works out. And so one of those things that you'll do is, if that is your model, right? If you're using the white glove flat rate, then you need to be reevaluating that on a regular basis, maybe quarterly, maybe at least twice a year. Like, if I decided that 20% is my buffer, 6 months, is it still enough?
Yeah.
Maybe I need to now make it 22%, 23%, but whatever it is. And so your new clients aren't going to know any different. They're going to be like, well, it's 23%. They didn't know there was 20% 6 months ago, but now you're covering your costs. And that's how you protect your profit. Like, you really have to look at the numbers. You can't just go by your gut. As much as we all want to be touchy-feely and just go by how we feel, no, we've got to look at some numbers.
And I mean, this is that business owner stuff you have to do to stay alive in business. And for a long time, with that flat percentage for shipping, freight, white glove, all that, we have taught like 18 to 22%, depending where you are. I am now seeing in the Interior Designers Business Forum Facebook group, people are charging 30% because that's what it's
Mm,
costing in certain areas.
yeah.
So I love that you're saying this, Carleen. We have to have our eyes open to these numbers. You cannot assume that what worked 6 months, a year, 1 month ago is still working now
Yeah.
with how things have changed. You actually have to look at your numbers and make
Right.
sure that you are charging appropriately.
Exactly. And I've harped on this 1,000 times, but that's when using accounting software like QuickBooks or Studio Designer or something similar, where you can run a report. Because if you're just using a spreadsheet, there's no way. It's going to be so tedious for you to be able to kind of pull this information at a click of a button. So understanding that there's power behind those tools, and that they really can help you make more decisions more quickly.
Yeah.
So let's talk about tracking costs through your project lifecycle. So um, some of our clients are growing, and they're at the point where we talk about tracking profitability, not just on the company level, but on the project level. So being consistent, that means every time you have a cost of goods sold, it needs to be applied to a client, right?
Mhm.
So anytime, anything, shipping, whatever, it needs to go to a client, so that you can then, even throughout the project, but definitely at the end of the project, go back and say, "Ooh, I sold 200,000, but if you only made 2,000,
Yeah. It's
what
not
did you
good.
do? Like, you worked so hard for that, but let's make sure that you're making the profit on those projects that you need to, because that's going to drive the profit for your business. So compare your estimated hours, your estimated budgets against what you're actually spending, and against how much time your team is actually using for that project, because that's another one. I think we talk about tracking time, but budgeting. So if you're tracking, now you can see, well, I thought it's going to take us 100 hours to do this, but it
Mhm.
really took us 150. So that means you really need to increase your estimate, your proposal to your client, because it's costing you more in manpower to deliver the final product. Um, Reconciling vendor payments. I've seen people unfortunately pay vendors twice. Now, eventually, once you find out, you can get a refund, but think
Mm,
about how long it's been with cash flow being tight, that you didn't realize that there's an extra 5,000 that was paid to something that you didn't need to pay.
yeah.
Um, Also, things like, I need client returning something, making sure that you're doing the appropriate accounting, so that you're then getting your own credit back for the sales taxes, because you're refunding them, so that
Yes.
it's reducing your sales tax liability. Like, there's all these like little pieces that eat into profit that is, it's almost like, whew, it's a lot to think about. But once you have a process, it's not that bad. It's just getting the process down.
It is getting the process down. So if someone's watching feeling like I don't have a process, Carleen, how do we start this? How do we get a simple starting point process to get a better handle on profit and analyzing our numbers?
So the first step is admitting that you have a problem. No, I'm I'm being
You're
silly.
not wrong though. It's
That's
true.
true, right?
You
Like,
have to
so
acknowledge that, like, this is the best
exactly.
part about doing business. We are not all gifted with numbers and accounting. So you're
Exactly.
not wrong.
Be honest that, like, okay, maybe I don't know how well my business is doing, that I thought it was doing. Hopefully you have QuickBooks, or, like I said, studio designer, or a studio manager, I think is the other one, in place.
Mhm.
If you don't, that's the first step. Get it.
Yeah.
If you do, start running reports. If you're not sure if your books are up to date, talk to someone like myself or another bookkeeping firm. We can do just a review of your books, just to kind of give you peace of mind, to see, if you're doing it yourself, or if you're working with a bookkeeper that isn't necessarily experienced in the interior design world. We can actually do a review to show you, here's where things stand. Like, either this is great, you're lucky, things are just keep continuing, here's maybe where you can tweak it, or ooh, this is where we think you should fix things, or we could fix it for you. So just don't put your head in the sand. Like, actually take some proactive steps to get the right information, so then you can make the next decision. So what you do next.
Yep. I love that you said that. Don't put your head in the sand. And it's so tempting. It is so tempting just to kind of keep on going and keep paying for things and not look at it, the scary things.
Exactly.
And if this is something that you don't have the skill set for yourself, reach out to someone like Carleen, because I
Yeah,
mean, you have the whole gamut of services, from like full bookkeeping management to you can do audits and support designers for a one-time or smaller engagement, which can be
exactly.
just what you need to kind of kickstart your confidence and get things clear and organized,
Yeah.
to be able to have a much better sense of your numbers.
I wanted to leave one takeaway with your team, with our audience today, is that if it touches your project, it probably touches your profit. Meaning, not
Ooh,
only, yeah. So, like, think about things like credit cards. So if you're paying credit card fees on purchases, or you're taking credit cards and you're paying those fees, that's eating into your profit. If you pay for a rush order, or you're paying for something you damage, or reorders, like, all those things truly eat into your profit. So you have to look at it holistically
yeah.
to really understand how much money you're making.
Yep, that's it. Mic drop. We're good. You gotta just get your head out of the sand and look. I fully agree with that, Carleen. And if you need support with that, designers, because I know a lot of us do, myself included, Carleen is a fantastic resource. So her website's up on the screen. Please reach out to her if you need support with accounting. She has worked with so many of our profit insiders and really helped them transform their finances and their financial understanding, which I think is such an amazing gift. So thank you, Carleen. This was
Thank
very
you.
insightful. It's got me thinking. I'm like, what little things am I letting slip
Good.
through the cracks, and just like, oh, I'll just pay for that, or I'll just,
Yeah, it
I'm
adds up.
gonna go take a little look at my credit card statement and see what's going on now.
Keep
Carleen,
an eye on those costs, ladies.
we will see you back here next month,
Next
of
month.
course. And thank you everyone for watching. We'll see you soon.
Bye, everyone.
Bye.